Good morning, everyone, and welcome to another edition of Bleeding Crypto's Market Update. I am your host, Bleeding Crypto. Today is Monday, March 6th, and we're going to take a look at Bitcoin. So we're going to do just a quick reminder of where we were on Friday when I did my last update. And like I told you guys, I'm trying to bring you guys these updates every 2 or 3 days, depending on what the markets are doing. And this weekend, the market wasn't doing much. So what I did, I left it for today rather than break through my weekend. I kind of took the weekend off and hanged out with my family. So if you guys like this content, please hit the like button. The like button allows the algorithms on YouTube to get my video out to more people and get more awareness, get more subscribers, and I can continue to provide you guys with this update if it's if it's helping you guys and you guys are liking the content. I would greatly appreciate a thumbs up. Now, looking back to where we were inside of this area here, and to give you a recap, what we were looking at, we were looking to a push up to $25,000 based on those liquidation levels that we saw on HyBlock, and that was going to be a possibility. And then another thing we were looking at, we had talked about too, was this trend line. This is a trend line that I had on my map, on my chart, better said. You guys can go ahead. I'm going to do this. I'm just going to turn off my indicators for now. Just make it a little bit more cleaner. And if you want to go back to the video, I think I put this one here 2 videos ago. We talked about this diagonal trend line here. And what did we do? We didn't go up to the $25,000 level. And I want you guys to remember something that I said on the video on the last video that I did on Friday. I specifically said, just because the heat is up there does not guarantee that we're going to go there. And it's funny to hear the comments of some people that only heard that we were going to $25,000. People like that used to bother me, but now I actually smile because it shows the intelligence of the people you're trading against. Can you imagine? Those are the people you're taking their money from. Make no mistake about it, guys. When you're trading, you're taking someone's money away. There's a trade, there's a buyer, and there's a seller. One of them's going to win, one of them's going to lose. One of them is smarter than the other. So when you hear comments of people that are that ignorant, that either they don't understand English or they're just plain stupid, and they think that it's only going to go one direction, even though you tell them, it really puts a smile on my face because it almost solidifies that if you don't fall in that category of being ignorant, you have a very good likelihood of making money. So that's the beauty of this, of trading. You're trading against people, and I mean, you're trading against algos as well. So those are the tough ones. But you're also trading against people that are not very smart. So let's go into the chart, and we're going to talk again about the bull and the bear case, both. Because the price, guess what? It could go up or it can go down. That is what the markets do. Or actually, it can go sideways. They really could. But typically, we're going to break out of a sideways channel one way or another eventually. So let's see where the price is now. We're going to go to the 4-hour time frame for now. And what I have done to this chart that's different from Friday's chart is I updated these liquidation. I put the liquidation data already on this chart. So these yellow lines here, and you can see here to the right, it represents HyBlock liquidations. This particular one up here, this is the last one on the liquidation map. That's why I call it max pain liquidation, meaning that if it comes inside of this yellow bar here, this would create the max pain scenario, meaning it liquidated everyone. I'm going to repeat it again. This does not mean that we're going to go all the way here or even here or even here. It just means that this is at the time, currently right now, if market makers bring it up here, these people will get liquidated. If we don't, guess what happened? These people will get paid. That's how it works. Now, looking at the data, at the moment right now, you can see we're ranging. This is a 4-hour time frame. So we are ranging in a very tight range at the moment. but we are still above the diagonal trend line. And it's interesting because we were here on Friday. This is a pretty big drop here for Bitcoin. We don't typically see a 5% drop like this. And yet, look at the way we bounced. I love seeing the way technical analysis works out. Look at the way we bounced off of here. Look at the way we bounced off of here. Look at the way we bounced off of here. This was actually the beginning of this trend line. This one here, and then it confirmed here, confirmed a third time, and this one was actually a fourth confirmation of this trend line here. So this trend line at the moment is serving as very strong support, keeping in mind that these two here, horizontal support lines, is what I would call the line in the sand before hitting the abyss. And what I mean by that is this area here was a parabola move. It just went straight up with no real structure. So in my view, the way I view the market is that if we break through this and we don't get caught in as far as support inside of these lines, it has a very good potential of falling right through here because there was no real base established. There's a small minor one here at 19.1, but it was it was a pretty good impulse that we had when we left off the neckline off this double bottom. So from 18.4 up to 20,000, it was a pretty big thrust. Especially if you look at a higher time frames, it shows it a little bit better. So let me go to the daily real quick here. So you can see this move. It's this thing just exploded, not leaving much room for support at the bottom. So that's why these two areas here are the areas that I'd be looking at for the last line in the sand before coming down to 18.4, if that is the route that we're taking. This is just a visualization. If the bull scenario doesn't play out, well, obviously we're going to go somewhere. If we break sideways, we're going to go either up or down. So we want to have an idea of where these levels may be. Let's go back to the 4-hour time frame. Let me go back to here. It is interesting, guys. It's funny to hear people make comments because it's just like, wow. And I'm sure other people who make YouTube videos run across the same thing. The ignorance of people sometimes is just mind blowing. You think that no, people can't be that stupid. Yeah, this world is full of them. I mean, you hear about scams all the time. Like people will call people on the phone asking for the social security numbers, their ID, everything, and then they get the identity theft right off a phone call. That's people who literally will get scammed and give everyone their information, knowing that that's the last thing you should never do. But it is what it is. Anyhow, I digress. Let me go back to the charts here. Okay, so looking at this data here, for the time being, I'm not worried about these two supports just yet. I have plenty of I would say to continue to look to the upside for a move to these yellow liquidation areas. Let me put my indicators back on and let me show you something that we're at right now. So we are on the 300 EMA. 300 EMA is, again, the last EMA of support here. And as you can see, the 200 and 300 that I've been talking about for some time are very strong areas of support and resistance. You can see how we held the 200 EMA here. We bounced a few times. When we finally lost it, we wicked up. We came down to the diagonal support line, but we went right back up that 300. And we stood there. We stood underneath it till we broke above it, and now we're right above that 300. So this is it's in a very crucial area, in my opinion, of holding this area here before hopefully not seeing any more downside for now. Another thing you have to think about is the markets don't normally just drop in a straight line all the way down to a target that you may be looking for. They do when there's a catalyst, like an exchange going under, like we saw with FTX, when there's like the 3AC Celsius over the summer of last year that we saw, and they just continue to go down. But normal market structure, we see a dump, then we see a move to the upside, creating that higher low, liquidating people that are shorting and trying to piggyback on that ride, and then continuing to go down. If that's the route that the market makers are going to take the market lower, it's going to follow that type of route, because on the way down, the market makers can make money. They're not going to just make it easy for you to jump on board and say, okay, we're going down, let's just short 100x and we're all going to get rich. It doesn't work that way. Markets, every time we go down, what do? we come right up. Look at this move here. I'm actually going to focus just on this local move. I don't have to go so far in depth. You guys can easily do this on your own. I'm going to hide everything, and we're going to look just at market structure. When we drop, do we just continue? I mean, look, from here to here, that's a pretty big gap. But yet, did we go straight down into here? Is this a coincidence that we came here? No, the market makers knew that we're going to bring it down here. They know exactly what they're going to do to the market. But before they do that, did they give you a chance to jump on if you're jumping on here late? What's going on? Look at this. We come back up here and we knock out all of these people here who got short. Then we bring it right back down. We give them some doubt. We bring it back down. So look at this here. We lost the level from here, and yet comes back up here and knocks everyone out. You see how we come right back. We basically, this and this gave it all back right here. All this drop, it came right back up here. And yet we still continue to go downwards. Now, we just had our last drop. If you look at the way the market behaves, even back here, look at this. We dropped and we came all the way back up. Now you're looking at this here and you're wondering, I wonder what they're going to do. Back here, every single drop came almost back up, except for this one, came almost back up to where it started. So when you look at things like this, this is what you try to discern from the market. You look for patterns. The pattern here is more probable, not guaranteed. Again, not a guarantee. If you don't know what that word means, please look it up in the dictionary or you can Google it. So if it's not guaranteed, we may come back up here to do what? All the people that jumped on here and we come back up here, guess what's going to happen? Or even the people that got knocked out here that jumped in here, they will get liquidated when the market comes back up if they don't get out of their shorts. Bare minimum, they're going to lose something. They're going to lose something. So that's what I look for when I see these drops. I don't look for real continuation when I see candles like this. I look for reasons to go up because that's the most likely scenario. Once we drop, we come back up at some point. Look at this. Give it all back. Look at this. Give it all back. Look at this drop. Give it all back. Meaning on the reverse, obviously, we're coming back up and we're giving it back. We're giving the short back up. So at the moment, when I look at that and I think, okay, so what's the catalyst? Why would we go up? Well, where's the targets? That's where these liquidation datas come in. That's what helps me to look at that data and think, okay, this is where the market makers will get paid. This is the last one on the heat map at the moment. 24,550. That's why I put max pain, meaning that if we get up here, all of these would have been taken out. Now, I look at my spot liquidations. Well, excuse me, not spot liquidation, spot heat map. So this spot heat map is a little bit different. This spot heat map, again, like I mentioned before, this is an accumulative of limit orders on spot. Buy and sell orders here. Now on this area, look at this interesting area here. We've got very intense heat. Intense heat. I won't say very because yellow is very intense. That's the highest. And then the next one is where we're at kind of right now. At 25,000, we have an order. And let me just do the math real quick here. We have we have $12.8 million orders up in here in limit buys and sell orders in here. So we have a lot of heat to use as a carrot for an analogy to bring the market back up into these. And I've already showed you before in the previous shows how the price action likes to gravitate towards that liquidity, which is why they turn it on. They're trying to egg the market on to come here, come and chase me. And do you notice how this is just slightly above the liquidation data? So it's like the market makers are taunting the price action to come up here. If we get up to that $25,000 liquidation level, which is right inside of here, what do? We liquidate all of these areas here. And they come and grab that liquidity that's up in here. So that is still a possibility. That $25,000 is not a level that I'm inventing. It's not a level that I feel or want to see. I have data that shows that that's where the market makers want to bring the price. Now, that doesn't mean that it's going to happen, and it doesn't mean that it's going to happen right away if it is going to happen. That's, I think, is the biggest problem with people. They hear someone say that, okay, this is a level where this may go, and they automatically assume that as soon as they stop watching the video, the price is going to go directly there and nowhere else because that's what he said. That's not what an analyst does. An analyst, takes all the data, puts it into a chart, and tries to use his experience, go to the left of the chart, and try to come up with a probable game plan of where the market may go based on prior price action, based on his experience, based on the data that's presented to him, and try to come up with a plan so that you are not trading or investing via emotion. It's very easy for your emotions to get away from you when you have no idea what's happening and you wake up or you open up the chart and you see the price all the way back up here. Think about that. That's really important. That's the whole reason that we do analysis. If you don't understand why the price can go up here and you let go of the charts for a few days, you come back up and you see the price here, what is the most likely thing that someone is going to do if they see the price up here? They're going to go in. Oh my God, we reversed. We're going back up. Not knowing that this had a story behind it. There was reasoning behind going up here. There's nothing left past that. Look, nothing but dead air. There's no orders. There's nothing for the market to move past that, including on HyBlock either. There's nothing past 24.5 for a liquidation. Nothing else there. But if you don't know that, if you don't plot that out before you don't analyze the market beforehand, and you see that, you're going to get emotional, you're going to get excited, and most likely you're going to go into the market at the wrong time. Same for the downside. If you see this happening and you have no clue of what's going on, or you have no clue that the market will usually come back up to liquidate the folks jumping on in here and create a higher low, you will think that this is it, it's over, I'm going to panic sell, and you end up on the wrong side of the trade. So when you do an analysis, basically I'm trying to come up with a plan to the upside and to the downside so that I'm not caught by surprise. So when it hits those levels and you mark those levels on your chart and you say, okay, well, this plan worked out here, I can see where it's going and why it's going there. Or, okay, it came down here. Why did it stop here? Well, if you have this line already on your chart, you know why it stopped there. That was a strong area of support in the past and resistance in the past. Let me turn off these indicators. So that is what technical analysis is all about, guys. We don't have a crystal ball. We're not reading. We can't read the future. We don't know what's going to happen. No analyst out there is going to know which direction the market is going. All we can do is give reasonable reasons why it may go up to those levels, to a level, or why it may go down to a certain level. And then you can plot out, okay, I want to go short, I want to go long, or simply, I'm going to wait it out until a certain level hits on a higher time frame and then start deploying my capital for that guaranteed bull market of 24.25. That's all it is, guys. This is not something that we magically know by looking at this here which direction the market is going to go. Okay, so let's look at let's look a little bit higher time frames for now. Here's a daily time frame. Daily time frame, again, sometimes when you zoom up, you have a much better, it looks cleaner. There's not so much noise because all the action is happening inside of these daily candles. There's 24 1-hour candles in here. So when you look at something like this, you look at something like that, that's, for people who are not used to seeing that, it can become very intimidating. When you do this, it just becomes much more cleaner. It's just a little bit cleaner there. So I'm leaving this here. So this was our re-entry area. The 618, 706, 786 was an area of re-entry. And are we still inside of that area? Yeah, we have not invalidated yet. I put this area here, I think 2 shows ago, not Fridays, but the one before that. So it's been on there for about a week, actually since we started to drop here. So that was back on the 20th, yeah, so a couple of weeks ago, week and a half or so ago. And you can see where it's still valid. Did we deviate below it? Yes, we did. We deviated a little bit below it. We left a little wick there, and we came down. We bounced off of this support like I mentioned before, but we're inside of that range. This is still valid. And I even said in one of the videos, once we break through this and we close and we invalidate this, then what do? I said exactly. We will then erase all the data and formulate a new plan of where the possibility may now go, whether it's continuation to the downside or if there's an area or a catalyst for something moving us to the upside. Now, what do we have coming up that's going to be moving the market? We have a very important meeting. We have FOMC on the 21st. That's only, 15 days away. 14 days away. We have a very strong catalyst. Now, FOMC, so everyone knows, is not crypto related. However, it does affect crypto. What you can do on your own time, Google FOMC dates 2022. Then go to your chart, and on those days, just put a vertical line. All you have to do is literally just go right in here. For those who don't know, hit vertical line, find the date that coincides with the FOMC meeting, just tap it and it puts that line. You can put a line in each one of those, and then look at what happens to the price action on the dates of FOMC. I can tell you what happens. I've done the study before, and I don't want to waste too much time doing it here. It's a pivot. It's a pivot. So normally on the FOMC, we either pump into it, we pivot and we go down, or we drop into it, we pivot and we go up. Now, look at this price action. What do you think is the most likely scenario of what we're going to do for FOMC? Does it look like we will pivot into it? We will pump into it, or we will dump into it. In my opinion, I think we have a greater chance of pumping into FOMC and then FOMC giving us that retracement. Why? Because of this. Because of this. The market has ran and ran and ran. It failed to reverse the market, reverse the trend. So we did not break. I'm going to hide everything real quick here. We did not break the downward trend. We came up to the same level and we dumped. We didn't reverse the trend the way we were looking for, or the way we wanted to see the trend for a continuation. Could it still happen? Absolutely. But remember, we play a game of probabilities. So in my view, the probability is going to be more to the downside than to the upside. So in that case, what I'm going to do is I'm going to look for a scenario and confluence that will back up that scenario that I'm looking at. Now I'm looking at these liquidation areas here, and I'm thinking to myself, okay, market makers come up here, they will make a lot of money. They will liquidate billions of dollars in this area here. So since FOMC is a pivot point, has been a pivot point in the past, and we have run up on the market like this, and we haven't really cooled off, we haven't come down and really tested any of this move, and we're so far up here, it makes more sense that we go up for FOMC, pivot, and finally get some of those retracements that we've been waiting for ever since we left here. Look at this. We left here and never looked back. Continuation, failed to break trend, failed to break that area. This shows that this was just a relief rally. For now, no one can argue against it. I don't care if you're a perma bull. No one could say this reversed the trend. This is the new bull market. No one can give you any factual basis to believe that this is now the new bull market. And even if it was, it's not putting a very convincing market structure to the upside. It could, and nothing's guaranteed, but as of right now, we have no back testing of any of this area here that we normally see, or market structure reversing that trend. So for now, I am going to be looking at a little bit more upside. Don't know where. I really don't know which one of these two which one of these 1, 2, 3, 4 are gonna get completely knocked out. But I'm looking for some targets, some of these targets here. Maybe a move here, maybe even a move here to that $25,000 level that we saw on the spot heat map, or 24,550 is the end of the liquidation heat map. That would make a lot of sense in this area here. There's a lot of confluence in there. A lot of confluence with the resistance, a lot of confluence with HyBlock, and a lot of confluence with TradingLite heat maps. So for now, I'm going to use this as a target, which I know very well it can be below that. Here's another area that you can look for. We can look for a lower high. We had a high, a low, lower high, lower low. So we're going to take our fib, come up here to the previous lower high, and we are going to look at here. Now look what I just found. Look at this. Here's a lower high. Lower high typically fall within this range here. 618, 706, and 786. More often than not, it happens on the Fibonacci, on the golden pocket, does 618. And what do we have here? Very interesting. Confluence. Confluence with this liquidation on HyBlock with the 618. So do you see how you formulate a plan based on the data that's given to you, based on confluence, based on probability, and based on experience? And so this becomes now a really good area that my first major target would be inside of here. If the market can show us that it wants to continue to move up, I'm not going to get extra bullish and think, okay, we broke through here. Now we're going to go to 30,000. No, we have another strong area of confluence in here with previous resistance, HyBlock, and TradingLite. I'm not putting the TradingLite line here just because I don't want just a bunch. I'm trying to really minimize how many lines I put on here. But just to give you a visualization real quick, at that 25,000, we are right there. So just a real quick, I'm going to erase this afterwards, but just to give you the green, we'll put it on green right there. That was the HyBlock. That was a TradingLite spot liquidity, and then this is the HyBlock liquidation heat. So you can see here, there's confluence inside of this area. If the bulls can first break above this higher low, break above this liquidation, HyBlock liquidation, and push forward, I'm not going to be ultra or uber bullish because there's still another area here that I'll be looking at. Now, you break this, you get above here, and you start finding acceptance inside of here, that's a different story. That's a completely different story. Now we're starting to push into an area that we have not been able to break for a very long time. An area that has failed many times. An area that's starting to give us a reversal of trend. That's going to be a show for a different time. We're not there yet. We still fail to reverse the trend. So for now, guys, look at 618 and let's look at this. It's Monday. We'll have to wait to see. I'm going to wait Wednesday or Thursday. I'll do an update show. Like I said, guys, this is free on YouTube. This is to get, I'm trying to increase my YouTube channel. I do updates on my Discord every day. I do what I call a morning brief. So I talk to my, I present the updates on Bitcoin. We'll look at the market. I look at the HyBlocks. I look at the liquidations, and I do these every single day for my paid members on my Discord, for Twitter, for Telegram, guys. If you want to go on Telegram, I give some updates there as well. If you want to join my free Telegram, you can do so as well. And for YouTube, I'm trying to increase my channel, but I also have to respect my paying members. So I'm not going to give the type of attention that I do my paying members on Discord. So these are going to be coming every 2 to 3 days, depending on the moves of the market. But typically, I've been doing them about every 3 days. This one was done. Last one was done on Friday. Today's Monday. So again, 3 days. So maybe 4 if there's really nothing going on in the market. But please pay attention to what I tell you guys, and don't have a one-way bias. Just because I said we may go up here doesn't mean it's going to happen. And just because I say we may come down here and find support doesn't mean it's going to happen. I don't know what's going to happen. All I can do is make a case for both sides and see which one of those two gets validated and which one doesn't. And then I can formulate a trading plan around either one, whether it's to the downside or to the upside. Everyone have a really good day, and I'll see you guys in a few days.